Don't skip this video if you really want to change the way you trade. What I'm about to share with you right now is based on personal experience, and it has been working for me for a long period of time. My life as a Forex trader changed significantly when I discovered this simple strategy, and I'm about to share this strategy with you and how to discover them in a few minutes. Just stick with me till the end of this video. I promise you, you will learn something new from it. Also, if this is your first time of seeing my channel, please like, subscribe, and also share this video. This is the only way you can help us to promote this channel and also to help you get more of our videos when you release it. So without wasting time, let's get down to it and I'll show you how it is. So this strategy is all about candle formation, manipulation, and distribution. If you understand this strategy the way I'm going to show it to you right now, I promise you, your understanding of market and how to read it will be very easy and simple. So let me show you. Let's start first of all from how candle is being formed. Then from there we go to ray chart, and I will show you how it looks like in ray chart and how to discover it for each day. So for you to understand this particular strategy, you have to understand how candles are being formed. Okay, so every candle has four parts: the opening price, the high, the closing price, and the low. Okay, and also each candle has two parts: the wick and the body of the candle. So these are the key things that you need to know to understand this particular strategy that I'm about to explain to you in a few minutes. So when market opens, if market is in bearish mode, if market opens here, it first of all creates this wick. In most cases, it first of all creates this wick. Then before it moves up to this point, then come back and close at this particular point. And if the market is bullish, it first of all open at this particular point, create this particular low, okay, and then move up to this particular high before it comes back and close at this particular point. So your understanding of how this market open, go up first and go down in bearish candle, and how it opens, go down and go up in bullish candle is very important for you to understand this particular strategy that I'm about to explain. So let's get down to ray chart and I will show you how to trade this particular strategy. So now that you have seen how candles are being formed, there are other three important things that you need to know. You must know how to identify market structures. Second one, you must understand the sessions in forex market, and also you must understand time, because this particular strategy works with time in different sessions. So let's get down to it and I'll show you how it is. This particular chart to explain this simple strategy. Okay, if you look at this top corner, you see that the chart we're analyzing is AUD USD. Okay, and we are currently in 4 hours time frame. So first thing, I want you to understand that this strategy is only used to determine daily distribution of candle and weekly distribution of candle, and possibly monthly distribution of candle. So this strategy is very important for high time frames from daily up to weekly or monthly. It is very important that you know this. All right, so let's do our top-down analysis from weekly time frame. So from weekly time frame, this is how the chart looks like. The first thing I want you to do from weekly chart time frame is to draw these horizontal lines on your chart. These horizontal lines, what you use it to do is just to mark off the resistance levels and the support levels in your chart. When you mark off these particular levels, then the next thing is to find out the direction of the market. As you can see, currently the market is in an uptrend. Okay? And all these resistance levels will now turn to support levels for the market to go up. So that is why it is important to mark out these levels in your chart. So our first confirmation is when the market touched this particular resistance level, it rejected it still, then it came down to this particular resistance level, which will now be the support level for the market to continue going up. And then we have to be looking for bullish movement from here. So that's why we are going to use this particular area that I marked off for practice. So this is how it looks. Okay, so when market dropped into this particular zone, which is now the support zone, we are expecting the market to move up this direction. So our target here is how would we have gotten the opportunity to be in all these bullish movements? That is our target. So first, when the market created this particular candle you are seeing here, okay, the next thing is for we to know how we will trade the next week, which is this one. So first thing we need to do is to mark out the high and the low of this particular bullish candle. As you can see, the way I marked it out. Let me expand it a little bit. You see it. I marked out this high and this low. Now, if you look at this particular point, this is the closing of this candle and this is the opening of this candle. Let me mark it out too. This is the closing of this candle. And this is the opening of the candle. So these are the major parts of the candle that you need to take note of the previous candle that formed. Okay, the high, the closing, the opening, and the low. Okay, so the next thing we have to do now is to go down to daily time frame. So going down to the daily time frame, you will see everything very clear. So the market opened at this particular point, as you can see. Then it's created this particular low. Opened here, created this particular low. Okay, and then came back, made this distribution, and created this high, and then finally closed here on Friday. As you can see here, this is Friday candle. Okay, so now that the market has closed here on Friday, we want to know how we can enter this particular market again to get the opportunity to be in this market, in this particular candle distribution. That is our target. And we are going to find out how to use this analysis, this particular simple strategy to get into trade in this candle, this weekly candle distribution. So first, here the market has broken structure. Okay, now it has returned into it, and there is a fair value gap here that it returned into. Okay, that is well certain. Then the next thing is to go down to 4 hours time frame. So before we go down to 4 hours time frame, I want to show you something. This is Monday, the next day, the next trading week that we want to analyze now. Okay, this is Monday, this is Tuesday, this is Thursday, Friday, this is Thursday, Friday. Okay, so and normally I don't trade on Monday. Okay, I always look for opportunity. If I'm expecting the week to be bullish, okay, I always look for opportunity on Tuesday or Wednesday, and possibly on Thursday, depending on how the candle forms. You understand? This is very important for you to note that. So, but sometimes there is formation that I will see on Monday, and I will still take trade on Monday. But let's see how it looks like on 4 hours time frame. So going down to 4 hours time frame, this is how 4 hours time frame looks like. Let's expand it a little bit. So this is the beginning of that new week. Look at this chart. You see that this chart is divided by these dotted horizontal lines. These dotted horizontal lines divided this chart into days. Okay, this is, for example, this is Monday, this is Tuesday, this is Wednesday, Thursday, Friday. Okay, so I already know that this is Monday, the beginning of new week. All right, and market has traded into this particular order block here, okay, which is a confirmation for me. First, it's a break structure, and then it's traded into this order block. Now I'm expecting the market to create something like this, high, 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 low, and so on. And the market closed on Friday at this particular point. So the next candle that opened on Monday was created inside the body of this particular weekly candle. As you can see, this is the high. If you remember, this is the high of this particular weekly candle, and this is the low. So the first candle on Monday is inside it. This is Monday. So this first candle is inside it. Okay, so that's why I'm to take this trade. I won't trade on this Monday. Okay, I will be looking for opportunity on Tuesday. So on Monday, market showed that it wants to continue in uptrend by taking out this particular high here. So creating a higher high, higher low, higher high. So the next thing is for me to look for opportunity to enter on Tuesday. So on Tuesday, I want to join the distribution of this candle because I'm expecting a bullish movement. The next thing is that I want it to take out this particular high, which is the high of that previous weekly candle. Do you understand? So on Tuesday, let me mark off Tuesday, when Tuesday started. Alright, let me use horizontal line of different color. Let me change the color of this horizontal line to maybe something like this. Okay, so this is the beginning of Tuesday. Okay, Monday ended here, and here is the beginning of Tuesday. So let's go down to weekly time frame and see how we will get opportunity for this Tuesday. Hourly time frame. This is how the chart looks like, and this is beginning of Tuesday, right? So now we want to find opportunity. We want to see how we can use this simple strategy to find opportunity on Tuesday, to trade Tuesday. Okay, first we have confirmed that the market is going up. So on Tuesday we are expecting the market to go up, and on the candle we are expecting on Tuesday, first thing we want it to first of all go down to create the low, and then the next thing is to go up and create the high of that candle. So this is where sessions are very important. Okay? You need to know different sessions that we trade in Forex, which is starting from Asia session, the London session, and the New York session. And also time matters. If you look at this particular place, my chart is currently in New York time. Okay, I'm using New York time. So because of that, everything I'm going to show you in this particular chart is based on New York time. Okay, so first we are going to go down to 15 minutes time frame, because it is in 15 minutes time frame that we find out the right time to enter the market. Okay, so going down to 15 minutes, this is 15 minutes time frame. I'm going to expand it. So this is 15 minutes time frame. Okay, this is how it looks like. So looking at this is on Tuesday. First, the market opens here on Tuesday. Okay, this first part is the Asia session, because market opens in Asia session. Let me expand this a little bit, and this will be very clear for you to see. So this is how it looks on Tuesday. So market opens here, and in the Asia session, you always expect a consolidation during the Asia session. Okay, now when I see this consolidation in Asia session, I knew that something good is going to happen. Look at this consolidation that happened here in Asia session. See this consolidation? The whole of this candle movement happened in Asia time. Okay? Then during the London session, after Asia session, the manipulation always happens in the London session. It is always very important to know or observe what happens in every London session, because it tells you very much about what is going on or what is going to happen on that day in the market. So after this consolidation formed in Asia session, so the next thing is that since I'm expecting a bullish movement, I'm expecting the market to first of all break this particular range created by this Asia session down to create the low of Tuesday candle. That is the manipulation. So once market breaks this structure, which it did here, there is a fair value gap here from Monday. It came into it. My second confirmation. So normally I would take the trade here. Okay, I'll pick the trade here, expecting to be in the distribution of the candle, and just place my stop loss below this particular point, below Monday time. You understand? The previous day. Okay? But if you are scared, okay, that the market may continue going down, then the next thing you have to wait for the market to come up to. Sometimes, because it is not always perfect as people draw it, sometimes the perfect structure is when the market comes up, break this particular structure, okay, break this particular the high of this particular range created by Asia session, okay, and return into a fair value gap created during that particular movement. Then you enter it, more especially when it happens in maybe around 2 o'clock to 9:30 New York session. Okay, but if it doesn't happen that way, just like the way it appeared here, first of all, it came back to this particular level. Okay, then at exactly, look at this time, at exactly 8 o'clock, between 8 o'clock to 8:30, 9 o'clock, 9:15 in New York session, the market made this impulsive movement. You understand? This is another position you would have taken. Okay? If you didn't enter the trade when the market created the low of Tuesday candle, then the next place to take an opportunity is in this particular point at exactly 8 o'clock to 9:30 or 10 o'clock New York session, depending on how the candle forms. You have to just look at within this range. Then, if you didn't catch the opportunity, during New York morning session, then another time to find an opportunity is during the half day of the New York session. So first, the candle has made its movement, first impulsive movement of the day. Okay, then you wait for the candle to make a retracement into any fair value gap created during that impulsive movement in the morning session of the New York after the lunch time. Okay, so when the market returns there around that kind of 14 o'clock, that is 2 p.m. Okay, around 2 p.m. or getting to maybe 3 o'clock, in 2 p.m. and 2 o'clock. Then once you see an opportunity within that range, you have to enter for the second half of the candle movement for that day. Okay, so that is how you would have gotten up 2 opportunities here. First one is if you are a sharp entering and you usually enter at this particular point, or you would have entered at this particular point, or you would have entered at this particular point. These are the 3 places you would have entered the market. And here you set your stop loss, just here, take profit here, or you do this, set your stop loss here, okay, and take profits around here, or maybe this way. And something like this for the day. So the major thing is to join the distribution of the candle for that day. Okay? So what you look at for after Asia session, because Asia session creates the opening of the candle. Okay, then that small wick that you usually see is this manipulation that happens in London session, mostly in London session. Then after that manipulation, you look for opportunity in New York session between morning time, between 8 o'clock, sometimes 7 o'clock. Let me just say 7 o'clock. Between 7 o'clock to 9:30, 10 o'clock in the morning, New York session. It appears within this time. But if you didn't catch the opportunity, the next thing is to check out the afternoon time of New York session after break between 1:30 to something like 3 p.m. So this is the best ways to catch opportunity in the market. But it is also very important to trade this candle manipulation and distribution strategy with other trading strategies like support and resistance level, just the way I explained it here. So having seen how this particular strategy works, so the next thing is that you must trade it with other trading strategies. So you have to know your resistance and support levels. You how to know patterns and candlestick patterns, how to read candles. So all this will help you to know the direction of the market, because for you to trade this particular strategy very well or correctly, you must know the direction of the market for that day. If it is bullish, then you expect a bullish candle. Then if it is bearish, you expect a bearish candle. This will help you to know where the manipulation will be and where the distribution will be. So do this, and I'm hoping to see you in my next video. If you don't know anything about patterns or candle patterns, I have a video attached to this particular video where you can go and watch it. So see you in the next one. Stay tuned.